right, we're live with another episode in the series of webinars that we're hosting for you startup founders in collaboration with the SECP Innovation Office. We have the wonderful Najia Ubaid with us today, who is a head of department at the SECP. And today she's going to be telling us about the SECP regulatory sandbox, what it is, how you can use it. We'll talk about some examples, and we'll talk about the process by which you can apply to partake in their upcoming 2 cohorts, I believe. So Najia, really happy to have you with us once again. Over to you.
Assalamu alaikum, everyone. Thank you, Numair, for this introduction, lively introduction. Thank you very much. Let me just start sharing my screen and then we move on.
Perfect.
So, as Numair has introduced, that this session is about the sandbox experience and the background philosophy of the sandboxing here at SECP, and I like to explain it in the possible way, in the simplest possible way that is understandable to all the participants. So looking forward to have an interactive session at the end of this presentation. So first and the foremost, how would I like to proceed? It is generally, what is the regulatory sandbox? What are the global trends? A quick sandbox scan, how it is being taken globally, what is being considered in the sandbox regime. Then we'll come to the sandbox philosophy at SECP. What is the purpose? What was the scope? How many number of participants were allowed? What is the screening criteria? Then we'll move to the operational details of the SECP regulatory sandbox. When I say the operational details, that is what happened in the first cohort, to whom we have allowed in the second cohort, what are the business models that are being tested there. And finally, the SECP sandbox experience, that the results we have seen as a result of the cohort 1 sandbox applicants, and so far their outcomes, what is the way forward, what we have learned from the sandbox cohort 1, and how we have improved the cohort 2, and what we see in the future. So I'll try to move on each item line by line. You must all by now be aware of what is a regulatory sandbox. It is a tailored environment where the firms, your companies, or the startups can conduct live testing of their innovative business models. When I say innovative business models, that generally mean that they do not have the requisite regulatory framework available under the respective country, under the respective regime. This model is then, and it is innovative, it is bringing some kind of additional benefit to the economy, to the society, to the capital market, or to the business models in general. So it is kind of a controlled environment for a limited period of time under the supervision of a regulator. It can be any regulator. It need not to be the Securities and Exchange Commission. It can be any regulator. The regulatory framework is evolved as a result of testing and evaluation process in the regulatory sandbox. I have briefly tried to touch upon the objective. The objective is to provide a safe space for the innovative business models, to encourage them to bring innovation. So generally the innovation that we perceive is kind of fintech providing ease of business, fintech connecting people easily. So it is kind of a space that is provided to such companies, and it is termed as a regulatory sandbox. Another objective is to assess the viability of this business model to be launched on a full scale. So if this business model, this type of business model that is tested under the sandbox, regulatory sandbox regime, will it be feasible to upscale it, and if, what should be the condition to help in determining compatible and enabling regulatory environment that will be conducive for those innovative solutions. So that was a generic overview of what is a regulatory sandbox. If we want to see that how it is globally seen, globally it's been run by the securities regulator and the central banks as well. So the sandbox can be run by any regulatory authority. The timelines that the global practices have adopted, it is on rolling basis or on cohort basis. In Pakistan's case, it is on cohort basis. In the regulatory sandboxes, generally it is classified as either thematic or a general purpose. So let me move on further when I say what is thematic and what is general purpose in the upcoming slides. Purpose I've briefly touched upon can be fintech, regtech, any regulated entity which is growth focused, unregulated business which has some innovation, that is the focus of it. So you'll see in the examples that I'll share down the road during our presentation session that there are business models that were innovation focused and they do not have any existing regulatory framework covering them. In some cases, they do have the regulatory framework and the innovation is brought in just because of the introduction of the technology. So we'll move on and see what is the impact. Just to give further on the sandboxing thing, that is to make a point that it is not only in Pakistan that regulatory sandbox is being the concept of regulatory sandbox is being introduced, it's across the globe. So in UK, it's the FCA, Financial Conduct Authority. There it was introduced in 2016. I would say that the era that started the regulatory concept of the regulatory sandbox was around 2015. 2015 onwards, almost every country has entered into this regulatory sandbox thing one way or the other. So in Australia, it's the Enhanced Regulatory Sandbox. It is termed as ERS. That was again introduced in December 2016 to test innovative financial services on credit activities. In Bahrain, it's Central Bank of Bahrain. It's FinTech and Innovation Unit to test innovative models in digital financial services. In Canada, it's Canadian Securities Administrators, CSA Regulatory Sandbox. It supports the FinTech businesses. In India, it is IFSCA, International Financial Services Center Authority. They've introduced the Regulatory Sandbox of India. Again, the purpose is to promote financial technologies, FinTech initiatives in the financial products. Kenya is very kind of progressive market in it. Capital Markets Authority Kenya, they have introduced sandbox for crypto and blockchain solutions. It is an African country, but it's way forward in technological solution providing and testing of innovative solutions. In Malaysia, it's National Technology and Innovation Sandbox. It's a national initiative launched in 2020 to test innovative solutions in every field. Malaysia is a little different jurisdiction. They have the regulatory framework for almost each and everything, but they do have introduced the sandbox testing. So the regulatory framework already shared is tested through these innovation sandbox testing environments. In Russia, the Bank of Russia's regulator launched in April 2018 for piloting new financial services and technology that led to changes in regulations. In Singapore, it is Monetary Authority of Singapore that announced the FinTech regulatory sandbox. So it's spread across the globe. It's again just the trend. So I have already mentioned in UK, Canada, India, Sri Lanka, Australia, they all have different timelines. Some have introduced it on rolling basis. Some have introduced on cohort basis. In general, it's around 6 months to a year's period that the regulators generally provide for testing of the innovative solutions. So different regulatory authorities, everyone has their different specific focus, but the one thing that is common is financial inclusion and use of technology to bring ease in doing business, to bring automation, to reduce the paper-full environment, actually making it a paperless environment, more towards the environment-friendly objectives. So more or less, everyone has the same objective in mind. So what is the sandbox philosophy and the background when we talk about the SECP? SECP over the years have introduced many technology-assisted processes to modernize the corporate sector and to increase the ease of doing business. RegTech is the area where SECP is working and will continue working in it. SECP recently introduced the guidelines based on which it have completed first cohort and second cohort is under process, for which the approvals have already been granted and the testing phase is being run right now for the second cohort. So these guidelines were issued in 2019. And after, again, those were issued after a detailed jurisdictional analysis across the globe. And the purpose was to provide an enabling framework for testing of the innovative business models, especially technology-driven solutions. So we have provided the areas of our interest as well, and we received multiple applications in the cohort 1 as well and cohort 2 as well. And one interesting fact is, even after the close of the cohorts, SECP keep on receiving multiple queries regarding when the third cohort will be announced, how can we apply, even if when the cohorts are not open. Again, the purpose is to bring financial inclusion that is low cost, that provides innovative products accessible to mass market, development of innovative and competitive financial markets in Pakistan, regulated entity growth and development, again, e-activity, competition, and growth in the regulated financial service through disruptive innovation. The guidelines provides who can be the potential applicant, what are the different business models that can be tested, what is the criteria for qualifying for testing in the sandbox, procedure for applying, what are the various stages of the sandbox regime, the terms and conditions pertaining to the screening, the evaluation of those applicants and the business models who apply in the sandbox testing cohort. SECP runs a detailed screening criteria wherein weightage is given to financial inclusion, to the cost of business, to the technology disruption that is being provided, to the readiness of the business model. These all are the weights that are given in the while evaluating the applications that we receive in the regulatory sandbox. It has a separate sandbox committee that actually evaluates the application. So a thorough screening criteria is developed and screening is done on it. Again, it's the kind of same thing. Who are the potential participants? It's again the registered licensed companies with SECP, unregistered startups, internationally recognized, well-known companies, or any person that is SECP feels it deems appropriate. The point is that the proposal that people submit to SECP for consideration in the sandbox cohort should justify why that business model is needed, what is the purpose of those business models, how can it be beneficial for the Pakistan's economy or the Pakistan's capital market, or will address the objective or the vision of Pakistan of financial inclusion to the lowest level. Again, this slide basically identifies what can be the business models to be tested through regulatory sandbox. So it can be the financial robotic advisory, it can be the claim adjustments, claims, adjudications, and payments, any solution that provides insights into the artificial intelligence and uses that, any other category which the commission feels fit, innovative product, alternate financial intermediation platforms like P2P, crowdfunding, equity, debt crowdfunding. So here we have mentioned that innovative business model as donation and rewards, although donation and rewards are the two models for which no SECP approval is required. And globally, the donation and the rewards crowdfunding platforms are not regulated by any of the securities regulator. Then we have the category of digital assets. We have innovative insurance underwriting, insurance policy servicing, alternate risk transfer mechanism. So you have to think of an innovation, of a disruption that will bring financial inclusion, that shows that the product is ready to be tested in the market. So these features, if an application holds these features, they can come under the regulatory sandbox. Be innovative, should not be covered under any current regulatory regime. That is the must for an application to be considered. It provides identifiable direct or indirect benefit to the consumer. It should be very well written and well thought out that what type of benefits will it provide. It should adequately identify and address direct and indirect risks for the customers in the market. There should be put in place a suitable mitigation plan to manage risks and ensure protection to customers through a complaint redressal mechanism. This is one of the core elements, that the application should provide an exit opportunity for the investors who will be investing in their business model. If that business model requires investments for the investors, it should provide the mitigation plan in case there is certain complaint and how will it be addressed. It should provide equal opportunity to access financial services in Pakistan and should increase the financial literacy, financial inclusion. So it can be any of the business models that justify this criteria. I have briefly touched upon earlier that you have to submit an application on a prescribed format. There's an application processing fee that is 5,000 rupees, and it's easily manageable. Profile of the key management personnel of the applicant and the business plan must include the proof that the product, business model is unique. There is potential benefit for the product or the service to the consumers and the financial market. There's justification for participation in the regulatory sandbox. Why should one be allowed? The applicant has adequate arrangements and resources, both in terms of the HR and in terms of the technology that is required. And in terms of, again, any source that is required for running the business model successfully. The measures to protect the interest of the investors, consumers, and other market participants, and the risk management mitigation strategies in case the test fails. A clear intention to scale up the operation in case of a successful testing. I have time and again mentioned that it is very important and imperative to provide a very clear exit strategy. So it is kind of a core element that we look into, that the model is well thought out. It has seen what will be the impact on the business customers, on its customer. How will it be beneficial to them? What will be the sources of revenue? How will the costs be shared? How will the business model survive? At the end of the testing phase, if the model fails or if the model succeeds, what is the exit opportunity available to the investors? So this should be clearly laid down in the proposal, in the application that is submitted to the Commission for consideration. What SECP has followed in its first and the second cohort is that it has announced what are the deadlines for the submission of applications. Then the application is screened by SECP, and then the results are announced, detailed review and selection by SECP through seeking additional information. We engage with all the applicants. Almost all the applicants seek additional information, provide them an opportunity to present their solution. Then approval letters are issued. Testing is done under a close supervision by the relevant departments within SECP. Completion report is submitted by the applicant to SECP. It contains all the details on how the applicant has complied with the legal requirements and how do it see its business. Then exit stage is to be decided by the SECP on applicant's performance and along with the availability of the regulatory framework. If the applicant fails to adhere to the terms and conditions of the approval letter, that can also be temporarily suspended or the approval can be withdrawn. It depends on the testing phase results that whether the business model is feasible. Do we require a separate set of regulatory framework, or do we require some amendments in the existing regulatory framework? Again, the purpose is that if the sandbox, if a business model has been successfully run or is capable enough of being successfully run, if certain kind of impediments are removed from the business model. So it actually provides SECP quite a detailed insight in terms of devising the strategy for the framework or amendments that it intends to do. I've mentioned earlier that SECP has successfully completed its first cohort and is running the second cohort. In first cohort, we in total received 32 applications from 32 applicants. After preliminary screening and detailed evaluation, 6 applicants were allowed to test their business models. And it was for a period of 6 months. So the applicants were Finja, YPay Financial Services, Phoenix Alpha, Pakistan National Investor Portal, First Digital Takaful, WADA Digital Private Limited. So the basic business models was P2P lending, mutual fund digital distribution, robo-advisory, equity crowdfunding, digital general Takaful insurance provider, digital insurance brokerage model. Multiple business models were provided, as I've just shared that these business models were from different domains and different areas. So the P2P lending model is actually permissible under the regulation 29(1) of NBFCs, and specific regulatory is at final stage for this specific kind of model. It was successfully completed. So different business models, they can work under the current regulatory regime in terms of the mutual fund digital distribution. So the regulatory framework already exists. They have successfully tested their model in the matter of Phoenix Alpha. The same was the case. Pakistan National Investor Portal, that was an equity crowdfunding platform. It wasn't successful to the extent that it should have been, but SECP is of the view that this model can be adopted and is scalable. For this matter, SECP has proposed certain amendments in the Securities Act, whereby recognized platform operators can be classified as a regulated activity. Subsequent to the approval of those amendments in the Securities Act 2015, the Commission, SECP, intends to introduce a set of regulatory framework for the equity crowdfunding. For the first digital takaful business, amendments to the insurance rules are at final stage. One of the digital insurance brokerage model that was withdrawn by the applicant himself. So that was it in terms of what type of business models were tested in cohort 1. In the second cohort, SECP again invited applications with the focus areas of digital assets, blockchain solutions for capital markets, digital identity, AML, KYC solutions, robotic process automation based solutions. In the second cohort, we received 37 applications, and we allowed 6 of applicants to be successful, and they are under the testing phase. The 6 models that we tested were parametric insurance, real estate asset fractionalization through blockchain-based platforms. 2 of them were with the same business model. Centralized KYC was there, digital identity KYC was there, a model of digital ROSCA was there. So all of them are under the testing phase with SECP in the second cohort. So the basic takeaways from the running this cohort 1 successfully and allowing and evaluating the applicants in the second cohort is that testing readiness is of the core. So we need to be very understanding the fact that applicant is ready to be tested and to be tested. So that means that the business model that they have proposed is in a form that can be tested within a period of 6 months. So 6 months is quite a small tenure. When we say a small tenure, that means that you have to initiate your business, you have to run this platform. If it is a digital platform, then you have to invite the applications for investors. If the investors have to invest in, then you have to wind it up. So it should be ready for all the phases. And we need to understand that it is our first takeaway from the first cohort's learning was that it need not to be the 6 months period. It can be extended based on the application and the business model that have been suggested. So in the second cohort, we have allowed the real estate fractionalization through blockchain model a period of around 9 months for the completion of this testing environment. Then we have also learned that we need to be very kind of aggressive in the follow-up that we do with the sandbox applicants. We need to monitor them on more frequent basis. And then the final one was that if a sandbox applicant has to graduate from the sandbox business model to a regulatory framework, then simultaneously the regulatory framework should also be in a position somewhat in a position to be tested, to be allowing that sandbox testing business model to graduate to the normal regulatory framework. So this is all about the sandboxing thing. And we are open for any questions. Over to you, Nomer.
Thank you so much, Najia. Very insightful, and we have questions coming in from our audience. And I want to mention to people here on Zoom that you can share your questions here in the Q&A, and similarly on social media. So one such question we've received is is registration with SECP a mandatory step before applying for the sandbox?
Sorry, I was on mute. So technically speaking, if you say that registration per se is not mandatory, what we see is that is the company registered with SECP that is coming for the sandbox, and even if the sandbox business model, the business model that is presented in the sandbox application is the company is not registered and the business model is innovative and it meets all the criteria, we do provide the applicants an option to get the company registered. So preliminary, it's not necessary, but at the second stage, it is necessary that the company is, it is in the form of the company and the company is registered with SECP. Second thing is that it's not that any business model can be tested under the regulatory sandbox. It has to be some kind of business model that is supposed to be regulated by the Securities and Exchange Commission of Pakistan. So for doing that, yes, you need to have an approval from SECP.
Mm-hmm. And a follow-on question to that, is there any specific area that the business must be operating in to apply for participating in the sandbox? Like, is there a quota for general applications and certain industries like fintech?
So it's there is no specific quota. Like if I said that in the second cohort one, we just mentioned any fintech solution that encourages or increases the consumer base or that increases the financial inclusion aspect is welcome. But in the second cohort, we specifically mentioned that we are looking for the solutions that use the smart contracts as a technology, that use the blockchain or the distributed ledger technology as its base technology for providing solution and bringing inclusion. So there is no specific criteria or quota. It has to be innovative and it will be considered.
Okay, fantastic, fantastic. And so this is completely free, right? Is there payment that is required here for participating
So
in?
I briefly mentioned it's hardly 5,000 rupees for processing the application. That is the only thing that is required. And the forms definitely that they have to submit along with the application. But the fee is 5,000 rupees.
Okay, nominal, very nominal fees. And any advice that you would like to give to the founders based on what you've experienced in the previous cohorts? How can they potentially improve their application? What should they make sure to include?
Very nice and interesting point, Tamer. Actually, one of the things that I would like to emphasize and re-emphasize is that while devising an application, do think that if you had to invest in such business model, will you invest? So the business application should spell it out. These are the benefits. These are the revenue sources. This is how we will be funding our capital requirements or our expenditures. This is the source of revenue. This is the waterfall. What is in it for the consumers or the customers? What is in it for the society? It should clearly spell out the exit strategy. So one of the things that we had to time and again ask from the applicants is, please provide clear and concise exit strategy. In case there is a dispute, how will that dispute be addressed? So consider it as a business model and a feasibility that you are planning for your own business. So it should contain all the necessary ingredients, allowing us at SECP, the regulator, to take an informed decision of allowing you and considering that you are ready for the sandbox testing environment.
And Najia, SECP doesn't just look at the startup, but also at the founder, right? And the founder's experiences, or how important is that?
So yes, we do look at the profile of the people who are bringing it. It is very important that you have the relevant profile attached with you and working with you in this particular assignment that you'll be actually proposing. SECP do look at their profile. It looks at their history that is definitely publicly available for people. Otherwise, we do ask them, where have you been? What is your qualification? How relevant is that particular person to that business model is? We do scrutinize the profile of the management along with the founders as well.
Mhm. And I think it goes without saying that all their data is completely private and safely held with the company, right?
For sure, for sure.
Yeah. So there you go, Kamran. All right. As you mentioned, there's also they have to report to the regulator. So how often do they have to report, and they need to make sure that they're showing progress to get approval for a regulatory framework, because that could also not happen.
First thing in the first cohort, I would say, and honestly, it was that we used to get in touch with the sandbox applicants as and when desired, either by the regulator or by the sandbox applicant. But in the second cohort, definitely everyone learns, SECP has learned that it has to be on a certain frequency. So in the second cohort, it's generally on fortnightly basis that they report back to the regulator. They provide the areas where they need help. They provide the areas in terms of what is their progress in terms of the implementation of the timelines that have been agreed. Are they compliant with the conditions? Is there some hurdle that they are facing where regulator can put their foot in? So these are the areas, and these are, again, the outcomes of the first cohort that we have implemented in the second cohort. Specifically talking about, I believe the second part I missed, Numair.
The second part was that regarding the regulatory framework. So is it a confirmed thing that they get a regulatory framework? It depends on their performance, their business.
So if I say that equity, it depends on the combination of both. It's not a confirmed thing that you have successfully completed and you'll be graduated to the regulatory framework. Two things that are important is that successful completion definitely provides you a first mover advantage in terms if the regulatory framework doesn't exist. But in case of an unsuccessful application, there is a possibility, business model, there is a possibility that SECP still feels that the regulatory framework can be introduced. And when such kind of thing happens, then the applicant won't get any first mover advantage because of the failure that they have shown.
Right.
They have to comply with the regulatory framework. SECP might think that this business model is success if certain impediments are removed. So there is a possibility of introduction of the regulatory sandbox, of the regulatory framework, despite of the fact that the business model hasn't been completed successfully in the sandbox testing environments.
Of course, of course. So we have another question from an investor's point of view. And the question is that how can an investor be eligible to invest in a business incubated? Would he be eligible to, say, if they find an investor midway through?
So it depends on the business model that is being provided. If we talk about exactly about the equity crowdfunding, so what is an equity crowdfunding? Equity crowdfunding is meeting the startups or the new businesses, a little graduate businesses with the investors, so individual investors or the company investors. So in that business model, investors can jump in at any time. In the other business models, so if it is a capital intensive business model and you would like to invest as an equity partner or as a JV partner or as any other form, you would like to have shares of that particular business model company that is registered in the form of company. It all depends upon the terms and the conditions that you agree with the sandbox applicant. But definitely it will require certain kind of go ahead from the regulator, that is SECP, that such people can be introduced in that business model.
Right, right. So, well, there you have it, audience. Very insightful. If you have any more questions, you're welcome to share them with us, and we'll be sure to forward them to Najia and the team. We've also had a request for the slides, and I'm sure we can share the slides with you later. I'll coordinate for that. And yeah, tons of benefits, guys. The SECP Sandbox, a great opportunity for your startup, for your growth, for your learning. So where should they go to apply? Just to go to the SECP website, and it'll be quite straightforward, I'm sure. Right, Najia?
It is quite straightforward. But SECP, for the purpose of regulatory sandbox, announces the cohorts. As I've mentioned, that you have to follow the LinkedIn account, the Twitter account of SECP. SECP makes announcement that it is inviting applications for the third cohort. These are the business models that we encourage. It is in a statement that says that we encourage such business models, and the people then can apply based on the dead timelines that have been specified in the announcement. For the forms, these are included in the Regulatory Sandbox Guidelines 2019 that are available on the website of SECP.
All right. So guys, keep your eyes open. Go and like and subscribe to the SECP pages. Keep watching out. You'll get all the details when the cohort is open. And good luck. Good luck with your applications, and send us your questions if you have any more. So thank you to our audience, and thank you as always, Najia. Such a pleasure to have you. I'm sure the startup founders feel the same way. So much learning, so much insight from SECP, and we hope to keep bringing these monthly sessions to our audience. Thank you so much.
Thank you.
All right, I will end the session now. Take care, everyone. Love is Najia.
Love is. Thank you very much.